This is your January 2025 question paper. Look at this. Following is the balance sheet of which one? Light Limited and which one? Bright Limited is given. 50 lakh, 40 lakh share capital கொடுத்திருக்காங்க. Reserves, some working notes would be given. Long-term provisions are given. Trade payables are given. Plant property equipment is given. Inventory, trade receivables, cash and cash equivalents. Share capital, 50,000 equity shares of 100 each. 50 lakhs, 40 lakhs. Reserves are given to us. We are given details about PPE. Then look at the information. A company called as Rainbow Limited will be formed to acquire assets and liabilities of which company? Both the company. Assets and liabilities were acquired at book value except land and building, which is revalued at how much? 62 lakhs. Other assets of Bright Limited are to be, or which one? Obsolete and scrapped and sold for how much? 50,000 by Bright Limited itself before acquisition of assets and liability. Which is scrap? Other assets. Which company? Bright Limited. Other assets of Bright Limited. 1.75 lakhs. This is scrapped and sold for how much? 50,000 before the absorption. So what will be the impact? What will be the impact? We sold the asset for a loss. So what to do? 1,75,000 will be eliminated from the asset. 50,000 will be added with cash balance. 50,000 will be added with cash balance. Remaining 1,25,000 will be adjusted with P&L account. P&L account. Then will be issued 80,000 and 64,000 equity shares in lieu of purchase consideration due to them. It's a very simple question. So before amalgamation, book value 1,75,000, sale proceeds how much? 50,000. The balance will be debited to which account? P&L account. So bank balance will be 2,85,000 plus 50,000. It will be what? 3.35 lakhs. P&L account balance will be what is given before the sale of asset. What is given before the sale of asset? P&L account balance 4 lakhs minus the loss on sale. Minus loss on sale 1,25,000. This is pre-amalgamation event. Then they would have prepared realization account, then equity shareholders account, like that. Then they would have prepared balance sheet also. But purchase consideration, 80,000 equity shares of 100 each, 80 lakhs. 64,000 equity shares of 100 each, how much? 64 lakhs is the purchase consideration. Okay, they take over the assets. Land and building at revised value, plant and machinery, other assets book value, inventory book value, trade receivables and value, book value, cash at bank. Okay, 315 as it is. This 3.35 is nothing but old value plus on the sale of asset minus on the long external liabilities quota, net assets varum. Okay, but we paid a consideration of 80 lakhs and how much? 64 lakhs. What is the net assets? 81 lakhs and what? 62 lakhs 75,000. Here, no, cash along total consideration. 81 lakhs is the net assets taken over. 62.75 lakhs is the net assets taken over. We paid a consideration of 81 lakhs and 64 lakhs. So first company we paid more. We paid less. Net assets are 81 lakhs, but we paid how much? 80 lakhs. Now it is capital reserve. Second company 62.75, but we paid how much? 64 lakhs. Now it will be called as what? Goodwill. That will come in the balance sheet. Equity share capital is nothing but the purchase consideration given. You can go through 80 lakhs plus what? 64 lakhs. What is the purchase consideration given? 144 lakhs. Okay. Then reserves and surplus is nothing but this capital reserve. What is a capital reserve? 1 lakh. Reserves and surplus is nothing but that capital reserve 1 lakh. Long-term provision as per the net asset statement. Long-term provisions as per the net asset statement, how much? 1.5 lakhs. Trade payable also 3.4 plus 2, 5.4 as per the net asset statement. So liability side is over. Asset side போடும்போது plant property and equipment. How this 121.2? Revised value. revised value statement பாருங்க. This land and building plus which one? Plant and machinery plus other assets. 62 plus 44 plus 7.5 plus 4.5 plus 3.2. Add பண்ணேன வந்துடும். It will come as 121.2. Intangible asset. This 1.25 is nothing but that goodwill. We paid more consideration earlier. We paid more consideration. How much we paid more? 64 lakhs we paid. Net assets are 62.75. Now what is the goodwill? 1.25. That will come as which one? Intangible assets. Inventory of both the company, trade receivable of both the company, cash and cash equivalent of both the company. Totally how much you get? 151.9. Okay, this is balance sheet. And in the books of selling company, we'll prepare which account? Realization account. We'll transfer all the assets. We'll transfer all the assets. Then we'll transfer all the liabilities. By Rainbow Limited, purchase consideration due 80 lakhs and which one? 64 lakhs. The tally பண்ணீங்கன்னா you will get which one? Balancing for profit. Balancing for which one? Profit. The equity shareholders, share capital, all reserves and surplus you transfer. This realization profit also you transfer. Balance is payable in shares of purchasing company. It's a very, very simple question only. Only thing is that there is a pre-amalgamation event. What is a pre-amalgamation event? There is a sale of asset that is added with cash balance. Loss on sale is adjusted with which account? P&L account. So shareholders account போடும்போது P&L account the 2.75 lakhs and transfer account. We'll transfer only what? 2.75 lakhs. So okay, here consideration is given. 80,000 into 100, 64,000 into 100, consideration is given. Okay. So assets minus liabilities will give us which one? Net assets. We pay more. We pay more. That is goodwill. We pay less. That is which one? Capital reserve. That is recorded in the new balance sheet. That is recorded in which one? New balance sheet. As usual, they prepared which account? Realization account. We'll transfer assets. In assets. Land and building, plant and machinery, other assets, inventory, trade receivables, cash and bank balance at book value. We'll transfer liabilities, long-term provisions, trade payables, எல்லாமே book value தான். By Rainbow Limited for the purchase consideration. The profit is transferred to whom? Equity shareholders. Equity share capital transfer capital and reserves and transfer the realization profit. Balance is settled with which one? Shares in purchasing company. It is worth for the definitely 14 marks question. Like this, you have to go through which one? September 2024 question paper also. Just go through, that is sufficient. Because compared to the problem that we worked out, the problems in the examination will be definitely simple. You must go through the 3 exam question papers. This question also you must go through. Balance sheet of which company is given? Bill Limited and which one? Nice Limited is given with share capital, reserves and surplus. Okay, various liabilities are given, assets are given. P&L account has a positive balance and a negative balance. Long-term borrowings, loan from banks are given. Debtors, bills receivable, creditors, bills payable is given. For every 5 equity shares held by equity shareholders of Well Limited, they will receive what? 3 equity shares of which company? Nice Limited. Who's purchasing? Nice Limited is purchasing the business of which one? Well Limited. So who's Nice Limited? First company. Who's Well Limited? Second company. So 5 shares, for every 5 shares held, they will get what? 3 shares held. So number of shares into 3 by 5 into at a premium of 20 per share. 10 plus 20, 30. Debenture holders will be allotted to receive the same amount of interest. Preference shareholders will be allotted at a discount of 10%, like that it is given. Bank agreed to waive 270,000 loan, take that minus 270 and the mari. Expense on liquidation reimbursed by what? Nice Limited. Inventory taken over at 10% more than the book value. Debtors mutual due, eliminate pandipom. PPE 20% above the book value. Remaining assets are taken over at what value? Book value, like that it is given to us. Now purchase consideration, which method? For every 5 shares, they are receiving how much? 3 shares. But the number of shares are clearly given to us? Yes. Preference shareholders, how much they will be paid? Is it clearly given to us? Yes. So which method you will follow? Net payment method. You can check. Purchase consideration, they would have worked out. Preference shareholders, 16,000 equity shares. Equity shares, 200 equity shares into 10. 1,25,000 into 3 shares for every 5 shares held into how 120? 100 rupees face value plus 20% premium. This will give us purchase consideration. This will give us which one? Purchase consideration. Preference shares pathina 18 lakhs, they are given a 10% discount, 16,20,000. Debentures, debentures pati. 10% debenture holders will be allotted what? 9% debentures that will bring them same amount of interest on solid. Okay. If you look at what is the 10% debentures? 9 lakhs. How much interest they are getting now? 90,000. 90,000 they are getting. Therefore, we have to allot 9% debentures to get this 90,000. Now we have to give how much? 90,000 divided by 9%. We have to give what? 10 lakh debentures. At present, how much debentures are there? 9 lakhs into 10%, 90,000. They should receive the same interest. At 9% means we should give what? 10 lakhs of debentures. With that, they would have passed journal entry. They would have passed which one? Journal entry. Business purchase account data to liquidator of well limited. Okay. Take over all the assets at revised value, all liabilities at revised value. Balancing for is which one? Goodwill. We pay the purchase consideration to equity share capital to preference share capital. Equity shares are allotted at a premium of what? 20. Debenture holders are given with which one? 9% debentures given. We are reimbursing the purchase consideration. Okay. Goodwill accounted out to bank. When we are reimbursing liquidation expense of selling company, what is entry we'll pass? Goodwill accounted out to cash or bank. This is to eliminate mutual due. This is to eliminate which one? Mutual due on the Mari. So I request you to go through these 3 question papers so that you will get a fair idea as to how they are testing. So compared to the problem, that 8 problems that we solved, these problems will be very similar. Okay. So at home, I request you to practice this January question paper, September question paper, and which one? May question paper. Even in May 2024 question paper, if you go through, compared to the problem, it will be a very simple question. You must practice. Look at this. They have given Intelligent Limited and which one? Diligent Limited question. Both the companies, they want to form which company? Genius Limited is given. Amalgamation is given on this following terms. Assets are revalued. Then trade payable, some mutual dues are there. Purchase consideration will be 22,000 shares in proportion to what? Profitability of 2 preceding financial years. Idhe mari or question panir. Regular class we would have done the question. Okay, same question we would have done in the regular class. Let's show the question also. Set 1 material da irukum idu. Idhe mari question nama panni amalgamation. Same model. Assets and liabilities are revalued. how to pay the purchase consideration, like that they would have given same model question. In proportion to profitability of the 2 preceding years, even the same model that would have been given. Preference shareholders will get preference shares, like that it would have been given. I request you to go through them. Okay, equity shares, preference shares, purchase consideration, and they would have done balance sheet also. The 3 years question paper compulsory to go through. 3 attempts question paper, I request you to go through at. Okay. The next class, there is Naliki in a session. If there is a doubt in all those questions, I will clarify. But I request you to go through that. In the meantime, or 1.5 hours, just go through the questions. Then, what is the session next? Of course, Varsha Madam's accounting standard session will be there. Next, consolidated financial statement. When it is planned? Tomorrow is Thursday, earlier. Okay, tomorrow we'll have the class. Tomorrow we'll have the first session. For which one? Consolidated financial statement we'll have. Tomorrow first session we'll have. Where we lower code, I'll just compile the questions and make it ready and send it to you in the group. And we'll do which one? Consolidated financial statements. I request you to go through the steps. The steps alone I'll share in the group. I request you to go through them. Because that is again the most important area where they test frequently. Without that, see, internal reconstruction, branch accounts, the amalgamation, the consolidation. ഇതിൽ 40 to 50 marks question is tested. Then accounting standards, MCQ, etc. You can easily manage. So tomorrow we'll do which one? Consolidated financial statements. So if you look at, if you are thorough in whatever we have done, final accounts பண்ணிருக்கோம், then buyback பண்ணிருக்கோம், then internal reconstruction we have done, cash flow statement we have done, then amalgamation we have done, branch accounts we have done. See, from these areas, the area you will get question for about 40 to 50 marks. There are 40 to 50 marks on the room. Then holding company accounts or 14 marks question, 10 marks minimum. If it is a consolidated P&L account, 10 marks minimum. If it is a full consolidation problem, they test for what? 14 marks on the mark. So from this itself, around 50 to 60 marks easier on the room. Like 30 marks MCQ, balance how many marks you would write? 70 marks you would write, but you will get question for how many marks?
84 marks.
84 ah?
84.
Eவ்வளவு question choice ல விட மாதிரி இருக்கும்?
Sir, 6 questions இருக்கும். ஒரு question 14 marks. 86 னா 84 marks இருக்கும். 84 ல first question compulsory.
So on the 70 marks area you would write இல்லையா? அதுல இருந்து இதுல இருந்தே 50 marks உங்களுக்கு வரும். Multiple choice questions, majority of them are based on accounting standards. The 70 marks out of 84, this covers about 50 marks. So we'll start with which one? Consolidation tomorrow.